All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for February 26, 2024. Start with the hybrid swing 30-minute charts. Begins with Alcoa. So here was Friday's trade. Here's the big gap down and sell off. So we're short standard risk. It sells off hard. Here's where the R10 reverses. We take the exit at the southern skin of the dragon in the usual way. That's about 3R. AI, been talking about this one for a while, and today was a huge move off the bottom. So you got this support, a bit of a kata 2 happening here. It breaks out above the Bollinger Band mean, so it just speculate in with a standard risk to the bottom of the dragon. The thing takes off. It clears the previous peak of the RL10. And now the next place it's going to go is up into here because this is not resistant. There's no resistance in here whatsoever. All right. This was part of a big sell-off, and then this is all the monkeying around, and then this represents a genuine breakout, and we're already at 3R in hand. So that's a 3R battle drill, and then it runs really fast through that whole gap in price. It rolls over, finds support at the edge of the dragon, continues higher, and closes near the high of the day. And so that's +3. So that makes that additional 5R move makes this one an 8R move and this one a 5R move. That's 13R and cruising. Now it's got to get through all of this crap, but I wouldn't bet against it. Maybe I would. I got a good entry, I suppose. But if we look at this, this is going to be a really important test of AI because it's been at this price level around 29.50. So to me, 30 is a really important psychological limit. So if it can get above this price level at 30, then 31.50 is in target. And if it just does tomorrow what it did today, it could get there. So that's looking pretty strong. Lots of potential. We have a good cushion and 2 positions in. Now, if I go out a little bit on this and take a look at the 3-day, I like this kata 2 formation here. It's cleared the dragon. The dragon is getting ready to start to roll up. The 30 is just getting ready to roll up. So this is getting very close to an owl entry on the 3-day. And again, all it's got to do is get above 30 and then watch it run. Early days still. So it's nice having some cushion on this one. Now, if this was just an intraday phenomenon, then this run up that came and tested here would have stayed here and come back to the VWAP, but it didn't. There was a second round of buying that pushed it all the way up here, and now compare that to the VWAP, and that's positive feelings about holding it overnight. That's why I would not be surprised to be seeing a favorable gap tomorrow in which case I will certainly protect the 13R and the 2 positions, but I'm looking to add to that just in case we get another day of rocket fuel. So that's some situational trading intraday that's set up by this hybrid swing. Let me know in the chat if you found that helpful. No trade in Caterpillar. This was on a 3-minute, this was a 1, 2, 3 in the morning with a wide stop and gave us half an hour. CVS, this was a interesting one. This was a gap up. So here was the close. It gapped up to here and then ran all the way to the high of the day and then rolled over. And when it crossed the VWAP, I said, well, maybe it's coming back to the Bollinger Band mean, and maybe it's going to come back down and test the RL10. So I speculated a short entry with that wide standard stop, which is about 50 cents. And it went through the Bollinger Band mean, through the RL10. Now it's a collapsing dragon, but we've got an R in hand, and it's sold off and closed here. So now we're holding 2R in hand, and it's down here testing this support level. So I'm holding that one overnight because you got the Bollinger Band mean down, the VWAP down, the dragon down, the RL30 down, the RL10 down, closed at the low of the day. If there was ever a time for CVS to collapse, this would be the time. But if it holds like it did over there, it should see some strength in the morning. So I'll put a stop like at the top of the dragon, like 76, 75, and I'll give it that much room. But not surprised to see it collapse from the harsh winter and go further. And this is part of my strategy here lately to have some exposure on weakness to overnight gaps. And this is one of them. All right, DIA closed weekly, no trade. Disney closed weekly, no trade. Devon Energy, this gapped up, rolled over. I got short here on an owl entry. It closed very poorly. We're holding about +1. I think there's a good chance for it to come down here tomorrow. So I don't feel as confident on this one, which means nothing, but we'll hold Devon Energy overnight. This feels like it could be coming down to here. The potential's there, so we'll hold that one. Emerging markets, no trade. ETHE gapped up, continued to rise. So I speculated in after one risk box of northern movement. That's like a hybrid frog for those of you keeping score. Then this thing rolled all the way up into here, closed near the high of the day. We're holding 3R. That's one I'll hold. Because when you add to that, that nice gap up, this thing has, it's cleared all of this congestion. And it looks free and clear. If we go out and look at the 2-hour, nothing but goodness. Well clear of the 30-day high back over here. All good. And we're still, the original positions on this thing are long from 7 down in here. So that's like a 300%, 350% gain. And what started off as a Godzilla has turned into fireworks. So ETHE is certainly beyond the hype now. So we're going to keep that one. Mexico tried short for a fraction, collapsing dragon for a fraction. Brazil, This was an intraday Kata 2. You know, you had this harsh sell-off, and then today it gapped and ran all the way up, then all the way down, held support, and there's a 1, 2, 3 on the 3 minutes in here, and crossing the dragon and crossing the VWAP, and kept it for a fraction. But if this works tomorrow, that shows some traction, and it can clear. This is a gap, so there's no resistance until it gets up to 33.60. So that's one that I would not be surprised to see at 33.60 tomorrow. So we'll watch for that to emerge. No trade in FXI. I am taking a position in I'm going to jump over to MCHI. That's the other China. China had been this week sell off, and it's climbed really hard out of the gutter, but it's been really choppy. And this was the first time in a while that we've had a rollover that sustained. And so I speculated in here, and it just kind of glided down. I want to try to take an initial position here on a tight risk and leave that stop in place and see if we can't get a downward drift to here. I'm just curious about that one. That's a pure speculation. Don't try that at home. That's it's not even a collapse. It's I guess it's a Kata 2. That one feels correct though. Intel, no trade. This is showing signs of holding into this nice consolidation base. So where would I be interested in this thing automatically? If it breaks out above these peaks right in here. So I think like about 43.35, a breakout above this 43.30, 43.35 with a stop down here of about 40 cents. If it breaks above this, I'm long. If it breaks below, call it 42.75, I'll be short. So this just feels like that sideways quiet channel. Nothing to see here, just noise. So I will play the breakout from that. IP, collapsing dragon short, we'll hold that overnight. Real estate, collapsing dragon big time. It was so successful, I didn't want to hold it overnight. It's just that's a odd reasoning, but this support level powered that, and I liked having a 2R win on the short side when I have a belief that IYR is going to be a place where excess gains in the equities are going to get stored in US real estate, which means this should be an attractive buying location. So having captured 2R on the other side of that trade felt pretty good, and I didn't want to risk it. But I know how to get short again, and I know how to rebound again. This was a case of two birds in the hand are worth four in the bush. Same thing with Coca-Cola. I had a chance to collect 1.5R on the short side. Happy to do it. KRE and R on the short side and cashed it. So most of these I'm not holding overnight, but a couple I am, but not the ones that are like Buffett stocks, like McDonald's, Coca-Cola, Walmart. Those are good stocks that Buffett's got to buy. He's got $1 trillion of cash or something crazy like that. He doesn't have that money, 150 billion. What's the difference? McDonald's, no trade. This is that China slow decay. The southern migration, let's call that the southern migration trade. And I'm expecting a move down here around 39. Merck, no trade. Microsoft, no trade. That's showing that decay 2 days now in a row of decay in a weak close. I don't want to be short overnight on that one, but that's starting to be troublesome. You combine Microsoft and Intel, that's not a healthy sign for tech. Marijuana, on the other hand, after a brilliant run up out of this support level, couldn't hold, and today it started to decay. PSAR flip, so standard short, and it just collapsed to here. So we're holding 3R, and it was testing down here for a while, and it was only in the last half hour that it got that run up. So I would not be surprised to see a test back here tomorrow. Remember, marijuana, MSOS, is the number one trading value as a target, which is a combination of the average range percentage that it trades as a percentage of its price is large, multiplied by the frog quality number, which tells you how consistent. Higher is better. So it has a reasonably high frog quality number and a very large average range percentage. When you put those together, you get a target with a lot of trading value in that it reliably moves large distances each day as a percentage of its price. So that's why you see me trading it a lot. Tesla's the other one that's typically near the top. Nike, quick short for an R. This was a crossing of the Bollinger Band mean was the trigger. It had already crossed the PSAR. Dragon had rolled over. VWAP is decaying. Dragon's fading. RL30's over. PSAR's flip. So speculate in. Sells off hard. When the R10 reverses, I take the exit at the skin of the dragon. And that gives us 2R. And no overnight risk. At the expense of Nike, the criminal overlords of retail. NVIDIA, no trade. That's another tech that is just, it feels bloated and content, and they're going to be playing defense to preserve the gains. So at the first sign of weakness, I wouldn't be surprised to see some rapid selling in there. So we'll see. Clean energy, no trade. Palantir, no trade. Rivian, no trade. The S&P was slow decay, the southern migration. I'm liking that name. Treasuries also the migration. Tesla, on the other hand, gap up and go, so I buy it. I should have gotten out here. But I like Tesla, and I let that overcome the rule. It closed right here, so we'll see. There's only about an R cushion on that one. So I don't recommend that as a strategy, but I felt like there was some COTA 2 stuff in here. And this was actually better than the tech sector. And there was some bad news in the markets for Rivian. And there's resilience. As long as he's under 200, I feel like it's a buy. So decided to hold that one to counterbalance some of the shorts I held overnight. Walmart, PSAR flip, COTA 2, standard entry, closed really well. It's a Buffett stock, 3R, and holding. No trade. I was really tempted to chase this one. I feel like I missed a chance in here. I should have been better on that. That move caught me by surprise in the afternoon. Did not see that one coming. Let's go to Try some sniper trades in here. This was the intraday on Ethereum on the 3-minute. This was the close. This was the big gap up. Here was the OR3. It kept going. So I put the standard risk box on it, which is about 20 or 25 cents. Standard risk. Rising VWAP. Here's where the PSAR exceeded it. And I just take the easy exit on the PSAR for 1, 2, 3, 4. Standard COTA 2 PSAR flip. It just kind of grinds along, had a little afternoon surge going into the lunch. So I thought I would pocket 5 from this. I'm keeping it as a swing trade, but this was a larger position size than I would normally have on a swing because how gappy this thing can be. So this was a large position size because of the tight risk, and this funded the overnight risk on the swing. So selling 80% of that essentially. This is the AI trade that supplements the swing. So here was the close last week, the initial OR3, the breakout above any resistance, emerging dragon's second position on a 2R battle drill. Then it starts running away like a scalded ape. Third position with plenty in hand. Standard exit. This one rocked. 1, 2, 3, 5, 6, 7, 8, 9, 7, and 5. 21. Sell off. You can't short. Well, I guess you can, but I have no way I'm going to short that. It held support at the VWAP. That's the VWAP magnet trade. Then it caught a 2, so why not pick up an extra 1, caught a 2, and then it closed really well. So this is if you're holding plus 23R on that one, do you hold that overnight? The answer to that would be yes. Yes, you would. So in addition to the swing trade on AI, I'm also dedicating an extra position from the day trade just because of markets money. Because if guys are looking at end of day data, that one looks like an amazing trade. And again, this is part of that. Here's the VWAP, and here's where they agreed to hold it overnight. That's a really double plus good statement of belief of early morning strength. A couple things just to draw your attention to over here. After this really tight red river, this thing, there's hardly any volatility in that. So the red river gets stuck way up here. Then it starts to break down into a sharp fall move and then into the winter move. And notice where the winter becomes spring outside of the red river. That makes this one a no-brainer COTA 2. You have a clear belly in the R10. It's well above the VWAP. You have clear evidence of strong buying pressure, a measured pullback, support. That's the no-brainerest trade of all. Situational awareness. So here's Walmart. This was a decision point. It did not fail. So I did not short, but it's on alert. It had an opportunity to fail. So I missed the short side trade. Was not prepared for that. Should have been. Here's a 1, 2, 3 entry. Do you take that entry? If you do, then your stop is here. And that's your little speculative risk box. And that size box is bigger than all but two of the 3-minute bars. So you could get out of that. If you saw this thing start to fail, you could get out here and then be a collapsing dragon. This thing closes well. You could play that one as a price crossing the dragon now. Do you get long here? You're on the favorable side of the dragon. Now you see the slope of the dragon has started to slow down and it's getting ready to potentially hook back up. You see the PSAR coming down to here. That's a price level you could get long at. There's the crossing of the Bollinger Band mean. That's a price you could get long at. So now the question is, do you get long here? If so, your stop could either be the belly of the dragon or the belly of the RL10. So you could have a stop here or a stop there if you got long here. Choices. You know, the last time it was here and it held, it ran all the way up to here. So our expectation is tactical trading to this price level. And if it gets north of this, then it could really go. So you have some choices about where you could get long. All right. So if you wanted to get long here, tell me, would you get long at 1 or 2 or 3? And then would you pick as your stop the belly of the dragon or the belly of the RL10? And we'll call that A and B. I like 2A. I like 2B. So 2B would be this one. I also like 2A because I like the confirmation of the Bollinger Band mean. I see a 1B, which is this trade. Nothing wrong with that either. That's very close to 1 to 2B. So there's my entry. 2A. As you'll recall, this was A, and that was B, I think. Is that what I said? I think that's what I said, yeah. So I took this one. You know, I'm eyeballing the VWAP. Crosses the VWAP by this time. Your stop, whether it's here or here, you need to have your stop like just below the VWAP. So that you can lock in that little wedge. Now you can leave that there to breathe for a while. You know, this thing has already moved up to here. So now but you know, you could decide how long you want to leave this here to let it breathe. On the other hand, you know, that would put at risk This is your open profit now is this. How much of that do you want to give back? I don't know. You could decide to move your stop. So this is the no lose plus dinner for two at C. This is the VWAP and the upper skin of the dragon at D. This is the 1 bar low at E. So what do you like? C, D, or E? Assuming price has come, I think price came back to here. So the upward move was this, and then came back to here. Do you like E, D, or C? I'm not going to let you just break even, and I'm not going to let you keep that price or keep your stop there. There's no reason to. We're just not going to allow that. Because you're holding E is like 1R. Yeah, I mean, I like C or D. I also don't mind E. I mean, you gave it a chance to run up. It's holding, that's sort of you wouldn't be surprised if this failed right here. And if so, that's the first, this move down is the first sign of failing like that. So E would justify holding on to 1R. D would say, I'm giving it this much room to play, but I'm doing a little better than no lose plus dinner for two. So, take your pick. So I see a lot of C. I could argue for D. I could argue for E as well. But I think they all held. Now you've got um, the first real test. There was a test here, you know. I could see that as like a 1, 2, 3 exit or a spine exit. If you do that, then you got to decide how much of this price action gets you back in. Is it a recovery back to the R10 and a breaks out of the higher? I think that's where you get back in. So the point on this one was that's not too late. Yeah, in retrospect, the 1, 2, 3 entry after the turning point of the R10 and then getting an entry at the skin of the dragon. So if you had been short from up here and the R10 reversed, that's the price that gets you out of that trade, which now says there's a reasonable chance for that move. That's sort of the argument for the early entry. This is the argument for it crossed the buffer of the dragon entry. And this is the one where, dude, PSAR flip and cross the Bollinger Band mean, and you got that much cushion, and that's the belly of the dragon. So that's sort of the entry of last resort. The real last resort is crossing the VWAP, and that's not dumb either. The crossing of the VWAP, you went from winter into spring. You don't even get summer till here, so that's the crossing of the VWAP, and then you're a stop down here below the dragon would still be indicated. And then that would give you something like almost 2R, 1.5R maximum favorable. So if that gets you out, this I think has got to get you back in. And then you get that second leg up to here. Sniper trade of the day. Let's see. Hamad. big gap down. Now, if that's your manageable risk box, one of the things you could do is take that and hang it from the top of that bar. And you end up getting a short, like a hybrid frog here instead of there. Just technique. This is a good profit preservation because it's come back to the VWAP after a slight excursion down. That's a good exit. I think this is a little slow getting in. I could be tempted in here because it held above the VWAP and generally rising highs. That's still pretty good. I think I'd probably scratch out of this thing somewhere around here. That's still not bad. Stop and reverse, good cover, worth a shot, worth a shot. They just didn't follow through. There was a lot of sideways junk today, not much room. Again, this is so this is EWW. Yeah, here's the close. Here's the OR3. That's the OR3 entry short. I don't think you'd lose money on that trade. I like the re-entry here. The R10 rolls over. The price rolled over. It's all still below the PSAR. So when this rolls over here, I like that short here. That's still, so that's really good. Good scratch. I like the effort. Maybe stayed too long, but you took the PSAR exit. That's good. I like that short again for the same reason. I probably would take that short because this thing is rolling over and failing. That's the low of the day. And then if your stop is just on the other side of the VWAP, you probably make money on that trade. Didn't feel like that may be enough of a move to suggest that as a SSC. Or when it crosses the VWAP, either one of those, I think gets paid. Wasn't much movement though. I agree. Better not to chase. Walgreens, they are so bad that I like this short. I love that short. I understand that exit, but I think, God, I wish you, when Walgreens is failing, pile on because this is that great Southern migration. They suck. And they're coming out of the Dow. Nobody wants to buy these guys. Stay away from the long side on Walgreens. They just suck. George, great work on the second entry with a quick cut. The re-entry we talked about during the small group coaching. You had 11R last week. We're ready to add that to the repertoire. And we have a good strategy for you to study on how to do that. I think we talked through that tonight. Good work. Got paid. And excellent AAR and the change in progress. I think we nailed that today with we were discussing whether to do re-entries or the stop and reverse trade. And we talked through the right sequence to think through this. So you're making real progress as evidenced by the stats that you briefed tonight in the small group work. Tonight's work was exceptional. Guys are really hitting their stride and showing. They persuaded me that the small group accountability is an excellent program to get the stuff applied to you. So the next cohort's going to start 1 April. I think we got 5 guys ready for that. I could take a few more, but if you're interested and want to get on board, let me know. That's a year-long program. And this is the last chance to get it at $2,500 for the year because that price is going up because it's consuming time. All right, let's go to the reports. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 53, 54, 55, 56, 57, 58, 59, 60, 61, 62, 63, 64, 65, 66, 67, 68, 69, 70, 71, 72, 73, 74, 75, 76, 77, 78, 79, 80, 81, 82, 83, 84, 85, 86, 87, 88, 89, 90, 91, 92, 93, 94, 95, 96, 97, 98, 99, 100, 101, 102, 103, 104, 105, 106, 107, 108, 109, 110, 111, 112, 113, 114, 115, 116, 117, 118, 119, 120, 121, All right, pushing the all-time highs again. We're still at the nosebleed altitude here for the 150, the 30, and the 10. This little orderly rollover was why I took a few positions on the short side. We're at such extreme nosebleeds. And then 2 days in a row, a failure to follow through has got me alert to downside possibilities. You see the 2-day weakness, bullish normal, volatility increasing short term. Four good candidates for the auto framer: Boeing, Cisco, Disney, and 3M. Lots of dojis today. So the absence of upside breakouts is actually kind of a hint of potential downside. And when you see a lot of symbols better than 3 on the frog quality number, there's a lot of consistency and complacency, which sets up a sharp volatility reversal. I'm talking myself into the short side here. Just a handful of auto framers. That means most everything is near its 10-day highs. No place to go. A bunch of squeezes today. Tech, McDonald's, the Qs. And remember that squeeze supports large moves in either direction. And most of the movement today was down. There were a few real standouts, like AI was up 10.5%. Ethereum was up 9.5%. That's one of the reasons I trade the crap out of those two. Tesla 3.8, Palantir 2.5, but most everything was down hard. Old bellwethers like Microsoft, Nike, CVS, Devon, Alcoa got smacked, marijuana smacked. So there was more downside volatility, I think. We're starting to see a growing number of symbols in the fall on both the large caps and the Dow. Apple can't buy any luck. They're in the winter and a big negative MACD. Is Apple becoming a value play on the basis of that? Not on my watch list, but maybe they should be. Yeah, that looks like winter. So this is like a fence sitter. If to use the sniper method, if we just go to the 50-yard line here, a perfect yin yang. It's here, sells down, comes back to baseline, sells up the same distance, sells down, can't make a new high. Here's the new low. I should have been piling on right here. But this is really, that's today's price action right here in the yellow box. I'll tell you what, if it breaks below 180, there's your next target. But if it rebounds from here, it has the last 3 times it was here, or last 2 times it was there. It had a nice bounce. So is it a bounce up or a bounce down? Add Apple to your watch list. This is a compound critical state. While the rest of the market is pushing all-time highs and 30-day highs and 10-day highs with a little bit of rollover, look at Apple. The absence of that strength. This time each time it's rolling over and the PSAR is pushing it down. So if it breaks down below 180, you heard it here first. So where does that inspiration come from? It comes from looking at this. Very few symbols in the large cap stocks are in the winter. And Apple's Z-score on the MACD Z is out of the Red River at minus 108. So it's in the winter and falling is what that is. Cisco's not going to be any better. Whereas all the other things are enjoying, springs growing and summertime and full bloom and a bunch of things in the fall that are rolling over. But only those are in the winter. And those three are horrible. So, yeah. Now, this is of concern here. Look at all those globals. They've had such a nice run up the last couple weeks that they're all in the summer and they have exaggeratedly large MACD Z scores. So they're out of their Red River up to 1 and 2 Z, positive Z. So that's after a long period of getting smoked. So they've had a nice little recovery catching up to the S&P, but they've become overextended. Whereas the S&P has already started to roll over. So let's think about this. You have the S&P had sold off and now has make a nice big move to all-time highs and is starting to roll over into the fall. The globals all were lagging and they sold off harder and turned later, and now they're in the summer and becoming exaggeratedly large at the same time the S&P is rolling over. If the S&P gets really weak, could these be long? How long would it take for them to start to collapse, especially because their gains are vulnerable after a much longer period of selling? So I think those are vulnerable. And you even notice some of these, you get the S&P, the Dow, both techs, the Russell, the U.S., the entire U.S. sector is in the fall. So I take those as leading indicators. Like if the S&P fails, the globals aren't strong enough to hold it up. So they would follow the S&P down. So this nosebleed territory for the S&P is a concern. And this was what I was talking about before. There's a lot more in the red than in the green. And the same thing over here. Lots of red and weakness. And yeah. First sign of weakness here in these. So that's the global starting to maybe crack a little bit. Okay, we'll watch it. Did not have as many overnight longs this, today as we did last week or the week before. I'm starting to get getting a little more cautious on that. I'm taking a few more on the short side overnight. All right, that's everything for tonight. I think we'll get this. Just want to take one last look at this. Yeah. The R10 started to roll over here today. So now take a look at the turning points in the Z-score of the R10. And the RL30 starting to get weak. And the slope of the 90, instead of continuing unabated, is starting to roll. That's my worry. So I think, having a psychological stop around 500 makes a lot of sense to me to preserve this outrageous good fortune. All right, that's everything for tonight. Take good care, guys.